so far we've seen the trend of fund flows into Indian equities has been through the emerging market pools. Do you see that equation changing? Is there a possibility that the fund flows into America will now come through India dedicated funds? Overall, because the India story in all of this seems to be slightly better than the overall emerging market pool. Would you agree?
Yeah, I do. Prior to derating of India, sort of from the middle of last year, my view was that India is emerging as an independent asset class. Very similar what happened in Japan in early years. And then Japan, everybody forgot about Japan for 25 years. And then gradually over the last 5 years, Japan was emerging as an independent asset class. I think the same happening in India. So instead of treating it as part of EM universe, more and more funds will be looking at India separate. From the EM universe, either through dedicated India funds or through the global funds or through industry-specific funds. And therefore, there will be more research done on India. There will be more trips to India to look at whether it's in a fixed income market, whether it's an equity market. In other words, to do more detailed analysis rather than just treating India as part of the allocation in the emerging market universe, which with the way people traditionally looked at India. So in the past, international investors never really have gone beyond some of the larger Indian companies, for example. I think today that is not true anymore, and I think that will become even less true as we go forward. So India has a capacity to emerge as an independent asset class. Now, why is that? Again, compared to the United States, just like US, India is adding labor, capital, and growing multi-factor productivity. Europe cannot do it. UK cannot do it. Canada cannot do it. China cannot do it. Japan cannot do it. But US and India can. Now, that gives you a very strong structural backbone. The other thing, geopolitical position. I describe India as too big to be small, too small to be big. It's too big to belong in any grouping, but it's too small to sort of punch its own way. And so it's in a perfect geopolitical position of benefiting from whatever geopolitical shifts are likely to happen on a global basis. You're also seeing India continuously investing capital quite efficiently. Now, we can debate whether 10 years from now that will be true, but India is still short of capital in a meaningful way. That's why incremental capital output ratios in India are good. That's why overall leverage of India economy is not increasing, and that's why Indian corporate return on equities are one of the highest on a global basis. So you can see how the same as in the US, there is a structural strengths. What are the weaknesses? Just like in the US, it's social and institutional. So if you think of the United States, it's got a structurally sound economy, but massive institutional challenges. If you think of Europe, it is not, doesn't have really institutional or political challenges much, but it could structurally have massive problems to overcome. If you think of China, again, institutionally, socially, they are okay, but massive structural problems because China has found itself in a liquidity trap. India is a little bit like US, structural economy, but the problem is social and institutional. And how you resolve those social and institutional problems could create a problem for India as you go forward. But so long as those are kept under control, structural forces will continue to drive India at least for the next 5 to 10 years. And that's exactly why investors are starting to look, and have been for the last several years at least, starting to look at India separately from just being an emerging market allocation. And I think that will continue to, that way of looking at India will continue to increase.